Dow 22,000. Hello, everyone, and welcome to another edition of the Smart Investor Stock Market Show. Well, the Dow has been hovering around the 22,000 mark for a while. What we'll take a look at in this episode is what are the prospects for our further rally, and what are the is the market overbought, or are we in for some more gains? But firstly, on Friday, we had the non-farm payroll report. The numbers were better than expected, and interestingly, and that's why it's always interesting and important to look at how prices react. The Dow didn't really do that much. Actually, the markets were flat on Friday. So we'll take a look at that, and we'll take a look at some resistance levels in the Dow. It's Monday, so we'll also do a summary, general market summary of what's happening across the various markets. We'll take a look at the euro, the dollar, gold, silver, the European indices. We'll just take a look at a broad outlook of what is happening in the market, so you can be more informed. So let's just take a look at the Dow Jones Industrial Average, and the market crossed the 22,000 mark last week, and which the media and investors met with a lot of hope. And the commentary I was listening to is that we're in for some more gains. Actually, there were some folks out there quoting Dow 35,000. So the bullish sentiment is definitely high at this point in time, and even though we're in a bull market situation, it is definitely important that you pay attention to what's happening in the markets, especially in this month of August, because sometimes in this August period we can get some pretty volatile markets and some erratic swings in the market. So the Dow is trading currently, as of it's Monday afternoon now. The Dow is currently up 20 points, trading at 22,112. The Nasdaq is up 25 points, trading at 6,377, and S&P 500 is up some 2 points, trading at 2,479. Because we're at or near to all-time highs in all of the major stock indices, the next area of resistance is more of a psychological level at the 22,250 mark, and we'll see how the market reacts to that point. If we do get a pullback, look for support in the Dow at 21,600 up to 21,750. If we breach below that area, we could be in for a slightly milder pullback. But what I can say is that this market here is definitely due and ripe for a pullback soon. What does that mean to you as an investor? It just means that what stance you should take, or what stance I am taking, is to be cautious. Yes, the market is still in a bull run. I certainly wouldn't be selling the market at this level, and worse, I wouldn't be shorting the market at this level. But it is a point that you have to be cautious at this point in time. I have a report out due, and it highlights the fact that the market could plunge unexpectedly over the next year or so, down 67-70%. And I have been getting a lot of feedback about that report, and a lot of folks are saying it's impossible, it could never happen. And what we saw in 2008, the 2008 financial crisis, was that magnitude of a drop off in the value of stocks. Just taking a look at the charts here, we had the Dow falling from 14,000 down to 6,000. That's almost a 70% drop. It's almost a 65% drop in the value of the Dow, doing some rough math. So it is indeed possible. Now we are in a bull we're in between 2009 and 2017. We are coming up on 7-8 years in this bull market, and what we could see is a decline and a correction. And what this correction will do, it will catch a lot of investors off guard. You'll hear things like a financial crisis, etc. But at some point in time, the markets must correct, and that was the whole point of the report. Not to call the exact top in the market. The whole point of the report is to say that yes, we are still in bull market condition or in a bull market condition, but it is wise to be cautious, and it is wise to pay a special attention to the market at this point in time. S&P 500, chart of the S&P 500. For those of you who are watching this video and not listening to it on the podcast, we have a number of days here in the S&P 500 where the markets have been just stuck in a range between 24,800 2,480, and let's bring it down to roughly 2,457 or so. And the market has been in this range for the last 2 weeks or so. Actually, it's from the middle of July up until today, which is the 7th of August. And this could be a sign that the markets are reaching an exhaustion point. Because if we do not close above this 2,480 level, that could mean that we are in for at least a minor pullback. I'm not saying that the markets will sell off strongly from here, but we could be in for a minor pullback. If we close above that 2,480 level, what we could see is a march up to the 2,500 level, which is a psychological resistance in the S&P 500. Okay, so that being said, folks, just pay attention to the markets at this level. I'm not saying this is the exact top. I'm not saying the markets are topping out. But the whole point, as I said, of bringing you an awareness is that we don't want a situation like what happened in 2008 that caught everybody off guard. Okay, looking at the US dollar. The US dollar has been tumbling ever since the beginning of the year. Actually, from 2017, the dollar index was at 103, and now we are at the 93 level. So it has been a pretty steady move to the downside in the US dollar index. But we are coming up on pretty strong support in the markets around this 93 to 92 level. Let me just put it on the chart here. And for those of you who are just joining us, first time you are listening to us, why do we look at the charts? Why we look at these support areas? Because this is what a lot of the smart money is doing. The smart money they are looking at these support points and making decisions around these support points to see if the support is breached. If support is breached, it means that the buyer's convictions are not as strong. Or if we do get a bounce from here. If we get a bounce from here, the market could head back up, and we could see some short-term, or at least some shorter-term stability in the value of the US dollar. So that is why we're taking a look at these charts. So the US dollar index is in a support area, and we're going to keep an eye out on the 92 to 93.50 level in the US dollar index. Taking a look at the euro currency, the 118.14 level, market blue, or the market breached resistance in the euro at the as you can see, this resistance level has held the market ever since 2015. Actually, last time the market was at this level was in early 2015, actually late 2014. That's the last time the market was at this level. So for the last 2.5 years or so, we have been boxed in an area of 117 down to 104 in the euro currency, and we're seeing some indication that the market is breaking out of that range. What does that mean? It means that we could be in for we could be seeing a bottoming out in the value of the euro. The dollar has been gaining against the euro ever since 2008. And we this could be a longer term bottom that the dollar is trying to pull back or to pull off. So yes, the dollar could make a recovery from here, but the key thing to look at is if the dollar breaches the 104 level in the value of the euro. That it will be key. If we trade and remain above that 104 level and we start to see higher highs, higher lows, that could signal that we're on a bottom in the dollar, and that bull market from 2008, roughly 8-9 year bull market in the value of the dollar, could be coming to an end. And if that is the case, what we could see is a rising value of gold, a rising value of other currencies, a rising value of commodities. And as I have been saying for a number of months now, I believe that commodity complex, the gold sector, is bottoming out at this point in time, and that will be the next bull market. That will be the next major wave upwards, because I believe the stock wave is closely coming to an end, and the commodity wave will be starting over the next couple of months. And I am actually very excited about that prospect. Looking at gold, speaking about bottoming out, let's take a look at the gold market. The actual bottom in gold so far was in late 2015, where the market was trading at roughly 1050. We're currently at 1,264 in the value of gold. Now, what are we looking for in gold? This is a daily chart of gold. Let's take a look at the weekly chart. What we're looking for in gold is the market to stay above this $1,000 region. Yes, we could get a move to the downside out of here, but if we stay above this 1,050 region, that will signal that the bottom could be put in gold. At this point in time, it's a bit uncertain, and if we could break to the upside from here, but I am still a bit cautious to see, okay, the next wave down, if the market turns down, where exactly will the market find some support? And that is what's happening in the gold sector. Yes, I know there's not a lot of folks talking about gold at this point in time, but it's smart investors who look for emerging trends. Smart investors look for trends that are coming up, and get aboard these trends early. Because if you can get aboard these trends early, then you'll stand to make a lot of money off of these trends. So while everybody's speaking about Dow 22,000, yes, that is almost old news. If you have stocks, yes, I will continue to be bullish. I'll continue to hold on to them. But we have to look. Put it this way. The market is closer to an overall top than a bottom. So I believe we're currently within the last 5-10% of this move in stock. So the question is, when the market eventually turns around, will you be like everyone else who goes off in a panic, or would you say, okay, the market has turned now, we have been anticipating this for a while, and let's see what other assets are out there for us to make money? Because no matter what anyone tells you, there's always something that is trending. There's always an asset class that is doing well. It's for you to position your portfolio to take advantage of those moves. Taking a look at crude oil, that is a market that is currently in a consolidation, but has been perking up. And what we need to see if you're bullish on crude oil, and let's just take a look here. Many folks have been calling this a reverse head and shoulders bottom, shoulder head, and this is a bullish pattern. And that's why we're saying that the commodities could be bottoming out, because across various different commodities, we see that the market looks to be putting in bottoms, or at least trying to putting in bottoms, and that's why I'm optimistic about the commodity complex at this point in time. So for crude oil to confirm a bottom, for me, we'll have to trade above this $55 region. And if we do trade above $55, we could return and we could see a series of higher highs and higher lows, which, as I said, will signal a bottom in the crude oil complex for me. So again, just giving you heads up for what could be coming in the future. Now, looking across, or looking at some popular stocks, that's what we like to do here on Mondays. Let's just take a look at Apple. We see Apple surge upward last week. Market put in an all-time high, traded close to the 160 level. Actually, it went to 159.75. We pulled back slightly, and we're currently at 158. So we're doing, Apple is at an all-time high, or near its all-time high, which is very good for the stock. If levels to look at it at the stock, if we start to trade below 150, I'll be cautious, and definitely below 145, 138, I would be, sorry, not 138, 142, I'll be out of that stock. I would take my earnings and go. Taking a look at Amazon. Amazon has also did fairly well, but we've seen a fairly harsh pullback. Market surge above 1080. The actual high was 1083. We're currently at $989, and if you're in Amazon, as I said, we're not anywhere near panic levels yet in this market. But if we do close below 900 or so, I'll be looking to take some short-term profits on Amazon and look for something else. Well, Amazon has had definitely a huge run in the last couple of years, and that run could be coming to an end if we do dip below the 900 level. I mean, you can always buy back the stock, and that's the thing with investing. You can buy back the stock if you see strength regain or strength come back in the market. Taking a look at Netflix. Surged surged up to the $190 level, and we have pulled back to the 181 level. But just take a look. For those of you who are not familiar with Netflix, in 2012 the stock was at $8, and now it's at $181. So you can see a massive move up in the value of Netflix, and that's what I say about being on the right side of a bull market, anticipating the next move. Because after the huge sell-off we saw some indication that the market was ramping back up in the $35 region or so, and the stock has just been on a tear ever since then. So always be looking out for the next bull move. Always be looking out for where we can see gains in the market. Currently, let's just take an update to see if anything drastic has changed. Currently, the Dow, when we started, was at 25. Currently, it's at 21. Nasdaq at 28. S&P 500 up 3. The Russell is up 1. The FTSE up 20. The DAX down 40, and the CAC is up 4 points. So a fairly quiet day across the various markets, and that is the overall summary for Monday. Tomorrow we'll be taking a deeper look into a sector that has been doing fairly well, and you'll see the sector I'm speaking about tomorrow, because what we could see is a sign of exhaustion on some of the stocks in the sector, and it may be a good time to rotate into some other performers. Okay, so thank you very much for listening to the show. Remember, if you like the video, subscribe to the video. What we will be having is we really want this to be a place for investors to get unbiased market information, unbiased price analysis of different stocks and different markets on a whole. So if you like that, we'll be coming daily. Subscribe, hit the subscribe button below, and you'll receive notification anytime we are on air. Thank you very much for listening, and I hope you have a wonderful day.